Good afternoon, everybody, and welcome to UFile's Facebook Live event. I'm Ida Chully, your coordinator. I will read up your questions for today. So just below the video, put in the comment section, write us your questions, and our very own tax expert, Gerry Vittoratos, will be answering the questions. Hi, Gerry. How are you?
Not bad, Ida. How's it going?
Pretty good, pretty good. You know, tax season, 1 week away from deadline. So yeah, it's kind of hectic.
Yeah, we're there now. Is it exactly 1 week actually? When is
Next
the deadline?
Wednesday. Next
It's next Wednesday.
Wednesday.
Oh yeah, so we're exactly one
Yeah,
week. Okay.
exactly 1 week.
All right, there you go. All right, so yeah, we're 1 week away. So hopefully everybody's filing their tax return, or at least getting around to filing your tax return. I think most people have already filed them, really, but we always
Yeah,
see like a peak right after Easter. We always see this little peak that comes right after Easter. So I think it's almost like it's almost some sort of a sign to tell people, okay, wait, it's Easter. Oh, right, my taxes. And then people start actually doing their returns.
I
So yeah,
know, I
April
know.
30th. So April 30th, like you mentioned, it's exactly next week. That's the deadline for filing the return. Now there is an extension to the deadline if you have any capital gains, due to the fact of the on again, off again capital gains inclusion rate change. It's finally off again in this case. So at that point, there is a if you have any capital gains with your return, you can actually wait till June 2nd to file your return. The deadline is extended for you if you had any capital gains during the year. All right, so that's the key. But it's only for individuals that had capital gains. Everybody else, April 30th, just like the usual.
Like usual.
Now,
All right, so we have a question. We'll start. Wow, people are detailed here. Thank you very much. So we'll start with Anna Howell. Hi, Anna. I submitted my family's taxes, but there was one item that I am still wondering about. Where in UFile Online should I have entered the information from box 30 on a T3? There are many choices in UFile for box 30. There was no other information on the T3 guide to guide me. The amount on the T3 was zero, so in the end, I left the box 30 empty in UFile and it called it a day. Does it cause a tax issue if a box has an amount of zero and you leave it blank? Thanks again for to the UFile support team. Another tax season done.
okay, so 30 is capital gains eligible for the deduction. So actually for the capital gains deduction in this case. So chances are you also had a box 21, which would have been capital gains, and then 30 would have indicated the portion, the portion of 21 that is eligible for the capital gains deduction, I believe. Let me go ahead and look at it in the software and see what that looks like. I'm just going to add here a T3 slip, and we're going to look at where's my investment income here. Okay, so I already got it there. And let's add my T3 slip. Just going to see, I think it's a portion. I think 30 represents a portion of 21, of box 21. Let me go ahead and look at it. Yeah, so you got 21. No, actually, 30 is there actually. It is likely. Well, it depends. Yeah, there's a few options there. Obviously, there's the before and after June 25th, which was the original capital gains inclusion rate change, which is no longer valid. So it doesn't matter which date you would have chosen; it would have been the same result. But 30 would have been very likely would have been the qualified small business corporation shares. You do have to include it. You do have to have it. You can't just leave it out because that is a capital gain that you have. Now, the good news though is that capital gain is usually exempted. Because you get what's called the capital gains deduction, because the trust sold shares that are eligible for the capital gains deduction. So due to that, it wouldn't have been taxable necessarily, but you do have to declare it though. So your best bet is to actually do an amendment on your return, do a refile of your return, put in your box 30. Chances are, unless you'd have to see which, I'm assuming this is a family trust because if it's a capital gains deduction, usually it's small businesses that it's going to have a share in. So chances are it's probably what the program will say is the QS BCS. Let me see if I can share my screen. Hopefully this will work. And the vendor did not sell me a bale of hay here. So let's go ahead and share. Oh, it actually works. All
Oh,
right.
wow.
Yeah. So the last time we did this, it didn't work. So I'm just going to hide you for 2 seconds. And here we go. So you see, you got all the box 30s over here. Okay, chances are it's a qualified small business corporation share. Chances are it's probably that box. If not, you'd have to check with the trust to see whether it's a qualified farming or fishing property. But it's very likely to be a qualified small business corporation share. And you do have to put it in. So my recommendation is put it in. There shouldn't be an effect on your return unless you've already used up your lifetime exemption limit. There shouldn't be an effect on your return, but at least it'll show on the return that you have the amount, and then it's exempted afterwards in your taxable income. All right, so let's hide this. Let's bring back Ida, and there we go. Wow, Ida, hold on. Let's go here. There we go.
Okay,
All right,
good. So our next
all right.
question is
Let's keep
from
going.
Hussein. I have some questions regarding
Hmm.
filing a T4 for my 15-year-old son. I have been adding my son as a dependent in the past for all the tax returns. My son started working last year, and this is the first time he has received a T4 from his employer. He has not made much
Yeah,
income, so he still is below the basic amount of 15,000, which is required to file the return. My
yeah.
questions are: do I say yes to the question in the UFile software, which asks if my son made any income last year? If you want to
Yes.
answer that.
Yeah, yeah. The answer is yes.
Do I file his return filing out the T4 information under dependent section and even section, even though he is below the basic amount?
Yes, you have to enter his T4 on his in his interview. So in his file that's linked to you. So you have to enter the T4 directly there.
Do I say yes to the question in new file software where it asks if this is the first time filing a return with CRA? By saying yes, I would have to enter his middle name, or do I say no since he has been filing as a dependent but no income in the past year?
So if you filed a return before at zero income, then the answer is no. But if you've never filed a return for you never transmitted one to the CRA, then the answer is yes.
Okay. If there's anything else I need to do in the UFile software under the dependent section for my son, let me know.
No, that's I think you pretty much have everything covered. I mean, basically you have to tell the program that there is income in there. You have to enter the T4 in his file. And again, if you've been filing him before, you don't have to say yes to the first return because it's not going to be his first return. But if it is his first return, if he's never filed before because he had nil income and you just never did, you never sent it, then at that point you have to say yes to that question.
Okay. And there's also is there a difference whether he put him as a dependent on his return, but technically he didn't submit a return for him, correct? So it's two different things whether he's a dependent and filed a return and a
Yeah,
dependent not filing a return.
because I'm not sure whether he has or not. Because when I'm reading the
Mm,
question, it says, "Do I say yes to the question, which asks if this is his first return?" By saying yes, I would have to enter his middle name, or do I say no since he has been filing as dependent but no income in the past 5 years? That's the problem. Is that the term filing? If he's filed returns before, then the answer is no. Okay, it's not the first return. But if he's just had him as a dependent in the file just to claim amounts, but you never submitted a return on his behalf, then the answer is yes. You have to say yes to that question at that point.
all right. I hope it's clear for you, Hussein. Next question is Jennifer. Why
Mhm.
wasn't the software updated to remove the date split for the capital gains?
Because the forms did not change. I mean, the government basically submitted to us the preliminary forms that have both dates. And actually, just like what I showed you on the T3 slip, the T3 slip did not change, right? The government never withdrew those boxes between June 25th and after as of June 25th or before June 24th, right? So because of that, we kept them in because the government did not change the forms at all. But it doesn't matter which one you enter. I mean, honestly, it really does not matter whichever one you enter, you'll get the 50% inclusion rate because the government has canceled the two-thirds inclusion rate.
Okay, the next question is he wants to ask a question related US returns, and I believe it's at the bottom. What is an income exempt under a tax treaty and how much?
What is income exempt under a tax treaty? Well, I can't help you on the U.S. return. I'll be honest with you. I don't have that specialization. But as far as this question here is, what is income exempt under tax treaty and how much? So essentially, when you're entering foreign income, Canada has signed tax treaties with other countries where they indicate the rules as to how to treat the various types of incomes on the returns of each country. Now, depending on the treaty, there are portions of income that are gained that are exempt under the tax treaty, meaning that they're not taxable in the other country. A typical example of this would be pension income. So, for example, since you're talking about the U.S., if, for example, you're a Canadian resident but you have U.S. Social Security income, 15% of that income is exempt. Okay, and that's what you would indicate as a tax treaty amount. Exempt under the tax treaty is the 15% of the U.S. Social Security that you collected. And every country that Canada has a tax treaty with, usually the pension income usually houses an exemption between Canada and that country. So that's what that field means.
He's also asked just a little bit further, where should I put Medicare and Social Security withdrawals?
That would be Social Security withdrawals would be foreign pension income. That would be the section. So you would go into foreign income, and you would choose pension. Medicare, I'm not sure. I'll be honest with you. I'm not sure where you would input that income. I'm not sure what type of income that is in this case. You'd have to check with the CRA to confirm that one. I'll be honest with you. I'm not sure, but I know Social Security withdrawals. That's purely pension income. I mean, so you would say foreign income. You would choose the foreign income section within the interview setup. And then once you're in the foreign income section, you would choose pension. That's what you would choose.
Okay, let's go to SEP.
Hmm.
Two questions. One, we purchased our first home in 2020, but we were unaware at the time that we could apply for the first time home buyer's credit. Is it
Hmm.
still possible to apply for it now while filing our 2024 taxes?
You can't apply for it for 2024. What you can do is amend your 2020 to make the request. So you could either do that through the CRA My Account website and you do an adjustment, let's call it an adjustment, directly on the site, or through UFile, you can refile the return. So you go back to your file, you make the claim for the first time home buyer within your 2020 file, and then you resubmit your return to the CRA. And then the government will amend your return and give you the credit.
Second question, we didn't claim our medical expenses from 2019 to 2022, but we
Yeah.
have kept all the receipts and records of unpaid balances from our insurance. How can we go about refiling and claiming those expenses now?
Same answer. Exactly the same answer as the home buyer's credit, but you do it for every individual year. Okay, so what you can do is again, either you go to the CRA website and you amend your return directly on the My Account portal of the CRA. Okay, you do it directly through the website, or you go back to UFile, you amend UFile, you add your receipts, and then you resubmit your return through what's called refile, and you do that in the you're going to do that directly in the net file tab. There's going to be an option there to refile the return.
Next question is Jody, and I think she's referring back to the T3 question where the person claimed the amount was zero. Jody's
Okay.
saying she said the amount was zero, so she doesn't have to do anything.
No, exactly. Yeah, but if there is an amount there, then you do have to enter it. Yeah. Sorry, I assumed that there was an amount there in box 30. Well, that why ask the question, So
Okay.
that's what I assumed. That's what I
All
assumed.
right.
So.
So next question is from Jean. My
Hmm.
17-year-old daughter's income is zero, and it has always been like that. She is turning 18 years end of this year. The tax
Yeah.
return on UFile says no federal return required. So I have
Mm,
not sent a paper file for her all these years. When should I
yeah.
start sending her return? Is it after she turns 18? And should I send a paper return when it is her first return next year?
Well, why would you submit a paper return? But there's no need to. You could.
Sometimes first time, if it's your first return, it
Yeah,
doesn't
if it's a
always
first
accept that
return,
file.
yes.
Yeah.
Yeah, if it's a first return, but I mean, otherwise, that's not the age is not the reason you would paper file the return, or the zero income. By the way, if you have zero income, you can still net file the return electronically. It's the fact, it is the fact that, like you said, Ida, it was the first
First
return
return.
and the
Hmm.
script. To me, you submit the year she turns 18, because the year she turns 18, she becomes eligible now for the GST credit and likely for whatever provincial equivalent, depending on the province that you're in. Okay, so for example, in Ontario, it would be the Ontario Trillium. Okay, so so at that point, submit the return on the for the year that she turns 18. So she's now eligible to collect the quarterly GST credit payment.
All right, our next question is from Allison. And her question is regarding rental income. I am
Yeah.
struggling with the percentage to declare for landlord use of my house. I
Mm.
have two tenants. One student lives in a room inside my house, and they share the entire house with me and my two kids. The other tenant is in a self contained attached suite and just shares laundry. How do I calculate the percentage of my use?
Yeah, in that case, what you would have to do is literally count the square footage. That's literally what you would have to do, essentially, because you're sharing a portion of your personal residence as a rental. Ordinarily, it would be very simple math. Where let's say, let's take like a three floor house. You live in two floors, and the renter lives on one floor. Then it would be one third. So then at that point, the rental would be 33%. But since you're using one of your a room in your personal house as a rental as well, you would have to count that room as well. So you literally have to count the square footage. So you would have to count the square footage of the self-contained establishment, and you would have to is count the square footage of the room that that person is living in. And at that point, that's what you would use, and then take the full square footage of the entire house. Divide one over the other. You get the percentage at that point.
Okay, next question is from Mary.
Hmm.
I am doing tax returns for a married couple, but the man passed away in January 2025.
Mm,
Can the wife, executor of the estate, sign the T 183 for him, and does she sign her name on it?
yeah.
Also, for the T 1032s for income splitting, do they have to be electronically signed with DocuSign? I will be e-filing for both of them.
The answer is yes. So basically, if she's the executor of the estate, she will sign on behalf of her husband. Okay, so that's the answer to the first question for T183. It's going to be the same answer for T1032. She's the executor of the estate, and, if you can still do income splitting in the year of death, then she will sign it as well. Okay, so because she's the executor, so she's the executor of the estate, it's perfectly normal for her to sign both forms in that case.
Okay, Jean, I believe we answered your question just
Yeah.
above. Ravi, in 2023, I reported medical expenses on my tax return, but didn't get any credit because the expenses were less than 3%. Can I
Hmm.
use part of the 2023 medical expenses in 2024 using the 12-month period from July 1st, 2023 to June 30th, 2024?
Yes, yes, you can, because on the medical you could have a floating year end, right? When it comes to your 12-month period, the key is though you have to make sure that they weren't claimed in the previous year, which in this case it wasn't because your 3% was too high. That's the key, is that you have to make sure that they weren't reported in the previous year, and then the answer is yes, you can move them by floating the year end, so you can maximize your medical claim. You'll be allowed to do that at that point.
Jody, to add to this question, do we have to figure out the split as it is irrelevant to taxes owed?
For the
Jody,
dates, right? I think for the date of capital gains, I think is what Jody's
yeah,
mentioning.
probably.
Yeah,
Okay.
the answer is no. No, you really don't have to. In any box you put it in, you're going to get a 50% inclusion, so it won't matter. Don't worry about that, Jody. Just plug it in. Just plug it into one of them.
Okay, Ashish. Again, I am Canadian and working in US, but my spouse and kids live in Canada. Should I consider should I consider me as a non-resident as I was only 60 days in Canada?
The answer is no, Ashish. You are still a resident of Canada. So I give this course to our professional clients when it comes to non-residents, and I crack a dad joke when it comes to this, where I say that the Income Tax Act defies the laws of physics. Okay, and that's really the case, because it doesn't matter whether you're physically not in the country. The fact that you have your spouse and your kids living in Canada, that represents to the CRA a significant residential tie to Canada, and that essentially makes you a resident of Canada, even though you're not physically in the country. So you are a resident of Canada. So basically, you file a return like as if you were living in Canada. Nothing changes there. You are a resident in this case.
Okay, next one, Indra. I
Mhm.
have been using UFile many years. In calculating capital gains losses for different years were different than CRA versus UFile.
Well, Indra, we would need the file. Obviously, that sounds like a reassessment. to me that basically where you declared something on UFile and then the CRA determined something else. That means a reassessment. You have to contact us in that case because we have to look at the file and see what happened. Is it an error of entry or is it a calculation bug of the software? And that's what we need to check. So you would have to contact our support line, reach out to us directly, and then usually they'll ask you to submit a copy of your file, which is anonymous. We don't get to see your personal information. We just get to see your entries. Okay, and at that point we can better advise to see what happened.
Okay, Bianca.
Hmm.
This year, CRA has some problems with autofill function. It seems it's still not fixed. I
Yeah.
tried to find all my T4s with my banks. Should I wait for the autofill function to be fixed on the CRA side? A separate question is for the review page of UFile.
Mhm.
In the past years, I got a refund because I am a student. I am expecting some refunds this year as well, but in the review page shows zero refund estimated. Is there any change for the review page or estimated for refund of the UFile software?
Okay, one question. So the first one is I would not wait for autofill. I would try to get the slips yourself through the emitters. Whoever owes you the slips, go to them directly and have them send you another copy. I mean, now with PDF and email, you can get those very easily. Because for the simple reason why I say not to wait for autofill is because even though the government, you're absolutely right, has had some glitches this year when it comes to autofill, you are still responsible for filing your return. You can't just wait for the CRA to give you your slips. Okay, you have to go to the emitters and you're still responsible. So let's say, for example, you've been waiting for the slips, and in the end, you owe money to the CRA. You owe money to the CRA, then the government's going to charge you penalties and interest, even though they have glitches in their system. You weren't able to collect your slips, so you are ultimately responsible. So do not wait for the CRA to fix their issues. Okay, go ahead and get the slips directly from the emitters and file your return. Okay, that's for the first question. The second question, without seeing your file, it's very hard to determine why you had a refund last year and why you don't have a refund this year. Again, you would have to contact our support staff and you have to basically send us a copy of both your files. Okay, and again, when you send us a copy of your files, we don't get to see your personal information, like your address, your name, your SIN, or anything else. We just see your entries, and then we could better advise you to see why last year you had a refund and this year you're not getting one. Okay, but it's not a change in the review page.
And
That's
the
simply a
only
change in your
well,
results.
the only thing she could compare her 2023 taxes with what she's doing now, see if her income
Yeah,
changed or
the comparative
the
summary.
credits or the
Then you could go to
credits.
you could go to your comparative summary. So when you go to the tax return tab, if you filed using you filed the previous year, we have what's called the comparative summary, and we show you side by side the comparative between your current year and your previous year. Check to see what's different from one year to the next, and that could give you a better idea. If you still don't understand why, then contact us. You have to contact because we have to look at the file. There's no way for
There's
me
no
to
way.
tell you offhand, why you had a refund last year, you don't have one this year.
What, you're not a genie in a bottle?
Unfortunately not. Unfortunately not. I can
Okay.
only predict the deadline, April 30th. All right.
Okay,
There you go.
Marianne. Does a Uber driver need to have GST registration number and mention it in T2125 form in new file?
I think they are. Aren't they required to have a GST number? I think each one of them would have to have a GST number, and I think the collections are done by Uber directly. I don't think
Does
they're
it
responsible for doing the remittances. In other words, for GST, to my knowledge. But yeah, usually you would be unless they're using the Uber general registration number. Yeah, that okay. I'm not sure. I'll be honest with you, Mariam. I'm not sure. I'm not sure if it's Uber if the driver uses the Uber general GST number or if each driver has their own GST number. That I'm not sure. I'll be honest with you. I'm not sure about that one.
Okay, Margolin, I filed my taxes for 2024 early and I received my tax return. But
Yeah.
later I realized that some T4 forms have been forgotten to file. Then I decided to readjust and file them. It was
Yeah.
last week when I checked my online Sarah account and said I had to pay 1,270. She
No,
corrected the amount.
12,000. Oh,
No,
she
no,
corrected
she
the amount.
says no,
Okay.
she corrected after.
Okay.
Sorry.
God.
I
Yeah.
just noticed that.
Well, I mean, it's listen. If you had some more T4s, it's very likely you're going to owe more because that means there was income that was not declared. okay, originally. So chances are you will owe more. The only way to really tell is to basically see if you have a copy of your original file that you submitted to the CRA, and then look at your amended file. Compare the two and see if the difference is that. If it's not that, then you have to look at it and look at what the government has assessed, and then see whether they screwed up, or if there's something wrong. If there's something wrong within UFile in that case, there's not much more. But you're definitely going to owe more money. That goes without saying. You're gonna owe more money because you're declaring more income than what you did originally. So of course you're gonna owe to the CRA in that case.
The only thing I'd suggest also when the T4 forms, check the taxes withheld at source. Some
Hmm.
people forget to add those, and maybe
Yeah,
sometimes that could make the difference.
that's true.
So,
Yeah.
just my 2 cents. Okay, next question, Jay.
Hmm.
I had self-employed income and expenses as a Uber driver. Regarding
Yeah.
the fee I paid to ICBC for class 4 driver's license, knowledge test, road test, etc.
Yeah.
And I also had my car go through a Uber vehicle inspection at Canadian Tire. I
Yes.
also paid RCMP for the
Police
police
check.
check.
Yeah.
Those are all requirements by Uber to be eligible to drive Uber. May I deduct 100% of these expenses or according to my business portion of my driven mileage?
I To me, yes. Okay, so it's either one or the other. To me, no, to me these are purely business expenses. I think you could deduct 100% because you wouldn't go through this for your personal vehicle. You wouldn't go through these fees if it was your personal vehicle. You had to do it in order to run your business. And so at that point, to me, they are 100% deductible. In my book, this would not be fees that you'd be required to do for your personal vehicle. So to me, it's 100% deductible. That's how I would see it.
Okay, I think Indra is asking her question regarding the capital gains discrepancy with the CRA. She's asking how to reconcile the number with CRA.
Because you find get different. I mean, that's the thing. You would have to check what the program generated, what the assessment generated, compare the two, and if you can't figure out why, you have to call us. There's no other way. You have to reach out to us directly, and then at that point, we could check your file, check the assessment. We need a copy of the assessment as well, and then we could better advise you as to why there's a difference. I can't tell offhand what's called why you have a difference in results without seeing the file.
Okay, Zia, my wife received income replacement benefits form from the insurance company. She was self-employed. Should I disclose this IRB income replacement benefit to her return?
Yes, it's very likely you would have to include it. Yeah, because that's the whole point. It's the income replacement. So at that point, it is a taxable amount usually. So you would have to declare it in this case, probably as a business income, very likely as a business income, because she was self-employed. Although it should come with a slip. I mean, that income replacement, it should come with some sort of letter or slip that's going to indicate where you're supposed to declare it on the return.
Okay, Jean, she asks, this was the 17-year-old with no
Yeah,
income. She's asking, I also want to know when I should set up a CRA account for her.
a
As a
CRA
Yeah,
account.
when should she file? Actually, it's my
My
account. So
account.
yeah, so she has to
I think
file the
I
first tax. She has to file the first tax return
Yeah,
to be eligible
exactly.
to
Yeah,
have the
yeah,
first my account. So
yeah,
at 80, at
exactly. You're
18, it's
absolutely right.
recommended to, even if it's a nil return, at when she turns 18, to
Yeah.
do her tax return for that year at nil return,
Hmm.
so she can have
Hmm.
a my account set up for her.
Yeah,
Did I get
yeah,
that right?
exactly. Yeah,
Okay.
yeah, absolutely,
Okay, good.
absolutely, absolutely. I can take a
All
break
right.
now. All right, go ahead, Ida.
Monica, who initiates a deemed disposition of investments in an intergeneration joint
Family
investment
joint
account when the
investment.
parent dies? Who receives the ACB?
The deemed well, tax wise, that's the rule. So even though it's the same account and likely you wouldn't be switching accounts in this case, you're triggering the deemed disposition in the tax return of the deceased individual. Okay, so the deceased individual will be deemed to have disposed or withdrawn those funds in the year of death. So that's where you would initiate it. It would be the deceased individual on their final return. They would initiate that. And who revises the ACB? You will revise it on your for your own records. And then when you sell the investment later on, the ACB will be the fair market value of the deceased individual as of their date of death. That's essentially how it goes.
Okay, that was Monica. Gerald.
Yeah. Hmm.
For unappreciated capital costs, Class 8 item, 5 years capital cost process. Is the initial cost of the
Yeah.
item entered each year as an undepreciated capital cost, or
Appreciated
should the
capital cost.
undepreciated amount be
Yeah.
reduced by 1/5 each year? Sorry,
So yeah, no problem.
tongue
And yeah,
twister, tongue
and
twister.
and and Ida, I know you feel it's underappreciated, this item, but it's undepreciated in this case. It's totally appreciated. Don't worry about it. It's the person appreciates the item. So in this case, let's go back here. Get serious, Gerry. All right. So in this case, it's the latter. What you mentioned there is the latter. So basically, it's what a class 8 is what we call the type of depreciation that you're required to take for class 8 is what's called declining balance method, which means that yes, you have to withdraw whatever percentage you took from the previous year from the value of that property that you will depreciate in the following year. Now, be mindful though that there is the half year rule as well. Okay, so in the first year, you can't take 20%, you're only allowed 10% to depreciate, unless you fall under one of these accelerated investment incentives or one of these other measures that the government had announced, or like immediate expensing at 100%. But ordinarily, it is half of so it's 1/10, in other words, in the first year, and then it's 1/5 every other year after that, which would be 20% every year. But it's a declining balance, which means your UCC has to be less every single year, has to be less by the amount of depreciation you took from the previous year. So to answer, it's the latter of your question there, of the two options that you present.
Okay, we're gonna go to Zia. I
Hmm.
have I have a friend who is under protection, refugee claimed. He does
Yeah.
not have the SIN. He collects a social assistance. Should I submit his return? If yes, then how to paper or net
Uh,
file?
well, forget net file for him or her, because or he in this case. So for him, there's no net file in that case because you need a SIN number. Without a SIN number, you can't do it. What I would say, Zia, is apply for a SIN number. It's actually very quick. You could do it. You could call them. You could usually get it over the phone, and try to get a SIN number, at least a temporary one. They should be able to provide you a temporary number for you to be able to plug it into the software and be able to submit the paper return. So what you can do is once you calculate the return in UFile, you just print the PDF pages, any federal page that's there. We also have a page that we call assembly instructions, and it'll explain to you what you need to submit, what you need to collate essentially, how to collate the return to be able to submit it by mail.
Okay, Jody. Uh, I think I can't write off the expense of my accountant fees to prepare my 2023 taxes.
I think I can't write off the expenses. It depends, Jody. If you have a business or if you have a rental, or if you have a rental property, you can, but only the portion of their fees that are related to the work they've done for your business statement or your rental statement. Those are allowable. But for your personal return, anything else, so pension income, employment income, medical expense donations, you're not allowed. Okay, you're not allowed to claim the accountant fees. But if you have a business or rental property, you can, but only the portion of their fees related to the production of those statements.
Mary, I called UFile and the lady there said the T1032s never have to be DocuSign. She said they are only required to be signed when paper filing and mailing in the returns. Can you confirm that answer was incorrect? As she said, as long as the T183 are
Yeah.
DocuSign, that is sufficient.
I mean, listen, in theory, we're supposed to sign T1032s regardless, okay? In theory. The government, though, gives a leeway for when you're net filing, okay? And essentially will not enforce the rule for T1032s when you're submitting electronically. If you're mailing it, you're absolutely right, it has to be signed. Okay, but if you are electronically filing it, the government will not enforce that rule. Theoretically, that rule is there. Okay, but the government does not enforce it. Okay, so the agent was not wrong in what they're saying. It's just that
Um,
it's administrative. Yeah.
if they have a T183, isn't that an e-file? She is a tax preparer.
Yes. Yes.
So isn't that the permission for somebody to represent you?
No, it's not.
Okay.
That's the catch. No, it's
Okay.
not. There's a T183, which gives you permission to submit the return. And then there's a general authorization, which is you're authorized on the return. So it's
Okay.
two different things. So yeah, it's only for one.
Okay. Mariam, does an Uber driver need to have? Oh, I think we
We
answered
answered that
that.
one. Yeah,
We
we answered
answered
that
that
one.
one.
Yeah.
So, Zia, I have an Uber driver friend whose gross income includes HST, GST. So
Yeah.
in the T2125, what would be his gross sales I should report? Should I include the HST in the gross sales, or should I subtract the HST when I report his sales?
You could basically do both. I think if memory serves me, the program allows you to put in the sales will include GST HST because your expenses will include GST HST unless they got reimbursed through the remittances, and then you would exclude it. But if you did not get reimbursed through the remittances, then you claim all of it. And actually, the program even allows you to put in the full amount and then indicate what portion of the total income was remitted to the CRA under the GST HST. So you could do that if you want to.
Okay, Corey, just write in the comments your questions. That's fine. Ray, I am filing a joint tax return and my wife's tax return cannot be net file with error that access code not accepted yet. The access code I am using was on last year's tax
Last year's
assessment.
tax assessment.
The
This I
access
think you
code
know this
the
better than
access
me.
code is not necessary to be
Yeah.
included. So try it without it. It's only a warning it gives you. Make sure in your messages it's eligible for net file. Do not attempt more than 5 times because then you're going to be locked and you're going to have to call the CRA to unlock the net file account. Be specific because they're going to think it's my account. So you can try it once again without the code.
Hmm.
Okay,
There you go.
that's we get that I see that question often, so it's okay.
Hmm.
Ashish, I have another question. If I bring my spouse and one kid under 17 in US and leave behind another kid 18 with my house under my 18-year kid in Canada, in that case, will I be considering myself as a non-resident in Canada? Please advise.
Not necessarily because you still kept your home in Canada, which is your permanent home
Or a
usually.
bank account or
So,
whatever,
or
depends
by
where he
yeah,
lives.
those would be the tiebreakers. The bank account and the Medicare card and all that stuff would be the tiebreakers. But you have two levels of residential ties for the CRA. You have what we call significant residential ties, and then you got secondary ties if you can't make up your mind on the significant residential ties. But in this case, you still have a significant residential tie to Canada, which is your permanent home. So that would tie you again to Canada. It doesn't matter whether you're in that case your spouse or your children come with you. If that ties you to Canada, you would still be considered a resident of Canada. In that case, very likely, very likely.
Okay, next question from Hussein.
Hmm.
Thanks for answering my first questions. You're welcome.
Yeah.
Follow up question regarding my 15-year-old son. Since he is filing his return for the first time with CRA, will I be able to
Mm.
file his return electronically, or do I have to send a paper return? Will I find that out after I pay for the UFile software online? If it is a paper return, what paperwork do I need to include in the mail?
So the answer is yes. You would have to paper file in that case if it's a first return. That's an exclusion by the CRA. It's not on our end. It's on the CRA's end. They want to get the paper version in the first year. And what do you include with it? We actually have a page called Assembly Instructions. Okay, when you get to the tax return tab, which will explain to you exactly what to do and how to collate, because there's a certain way you have to collate your the paper return. So it's going to explain all of it. All you have to do is just find that page called Assembly Instructions.
Okay, Ricky, what is the last date to file a tax return for a spouse of an Uber driver?
So it's June 15th. So that's the extended deadline for anybody who's self-employed, but that includes their spouses, and it's not necessary that their spouses are self-employed. As long as one of the spouses within the couple is self-employed, then the deadline for both of them is June 15th. Okay, so that's your deadline. Now remember though, be very mindful. June 15th is your deadline for filing the return, meaning you won't get slapped with a penalty. But if you have a balance owing on your return, the interest meter starts as of April 30th. Okay, so if you file June 15th and you owe money, the government is not going to charge you penalties, but they will charge you interest between April 30th and June 15th. Okay, so be very, very mindful of that.
Okay, Jennifer, if foreign income dividend or interest is taxed at the same rate, why does UFile require us to specify which it is? T-Slip does not provide that info.
No, it's not actually. It's not necessarily. Depends on the treaty, and usually it's actually a little different. If my memory serves me, dividends is 15% and interest is 10%, or in the U.S. is not supposed to be taxed at all. So that's why the program is asking. Okay, is because it's not necessarily the same rate between a dividend and interest. Okay, so you have to be very mindful. So that's why the program is asking.
Okay, Jay, I drove Uber only from March to June 2024, but I had oil change for my car in November. May I deduct that oil change expense even if I didn't drive Uber from April to December?
Listen, if your business is still open, if your Uber business is still active, you would be able to. But if it's not, but if you stopped as of June and you don't intend to go back, your business is basically has ceased its operations, then no, you cannot. But if you are continuing the operations, you simply just didn't drive during that time, then the answer would be yes. The government might ask questions if they audit you, in that case, because they might say, well, why didn't you drive between April and December? What happened in that case? But in theory, if the business is continuing its operations, then the answer is yes. But if the business ceases operations, the answer is no.
Okay, Sean, I have net capital losses from other years. Where do I enter it?
Okay. So this would be like, I'm assuming it's carried forward from previous years that you haven't used. Okay. So let's go ahead and bring back the software. So item's going to hide you for 2 seconds. And let's go back here. All right. So in the interview setup here in the software, all right, you're going to notice over here, you're going to have an option for carry forward right here at the bottom of the interview setup. So again, I'm in the interview setup. At the bottom right, you got carry forward amounts and prior year information, and you've got right here an option called losses of prior years carrybacks. So you tick that box, you click next. That section now will appear in your left-hand navigator, which will be called losses of prior years carrybacks. Click on that. And then from here, you've got net capital losses. It's capital losses, right? Yeah. Net capital losses of other years. Click on the plus sign next to it. And now you simply enter your amount. So choose go to the appropriate year and enter the balance that you had for that year that has not been used. That's how you enter them. And I believe we did a video on that, right? Ida on YouTube? I think we have a video on that, on where to
I
enter net
I
capital
believe
losses
so.
from
I
other
believe so.
years.
Yeah.
Yeah, on our YouTube page.
Yeah, I'll probably share it after when I'm going to go through the messages. I'll probably put it in the comment.
Hmm.
Okay,
Perfect.
next question is Ashish.
Hmm.
I do my tax return for my family, including two kids. Now, one of my kids is turning 18 next year. Still, I can do tax for my 18-year-old kid, or it needs to be done by the 18-year-old kid separately.
No, no, no. You can do your tax return for your child. The only thing you have to decide is whether you're going to leave your 18-year-old as a dependent in your file, or whether you're going to create an independent file for your child. But you could do the return for them. That's not an issue. There's no issue there. The government's not gonna is not gonna get fussy over that. It's just the question is, do you leave them as a dependent or do you put them independent as a separate file? So the question would be, are they a student? Can you claim certain amounts on their behalf still? Like for example, excess tuition fees that your son does not need on their return to reduce their taxes.
Okay, Sep I have a
Yeah,
follow-up question about your explanation. If I
okay,
want to claim the credit using UFile, as you mentioned, should I
yeah.
simply reopen my 2020 tax return, apply for the credit, and resubmit it without changing anything else? He's located in Montreal.
Yeah, the answer is yes. Yeah, you reopen your 2020 UFile file and you resubmit. And remember to resubmit for Quebec as well, because Quebec, since you're in Montreal and you're filing Quebec return, Quebec has the equivalent credit as well on the Quebec return. So make sure now once you claim it, the program's going to claim both ends, but make sure you resubmit both federal and Quebec because you're entitled to the same credit in Quebec as well.
Okay, Monica.
Hmm.
A follow-up question on the intergenerational joint investment account. Will the investment firm issue a T-slip for the deemed disposition? If not, how is the value of the investment known at date of death?
Is there going to be a T slip for the? It depends on the account. Normally there should be. Um, but not necessarily, right? Because I mean, if the account still continues, then nothing's been sold in the account. The only time the emitter would emit a slip is if the account gets closed. Okay, and then at that point they emit a slip under the name of the deceased individual to indicate the amount as of the date of death. But if the account continues beyond the death, then you will not get a slip. You will have to determine on your own what the value of that deemed disposition is as of as of the date of death. And the way you determine the amount, you got to go back historically, go to websites like Yahoo Finance, for example, and see what those investments were worth as of the date when your relative passed away. That's the only way to figure out what the value is.
Next question is Jennifer. How
Mhm.
does CNL impact my return? UFile is populated with numbers that means nothing to me. Should I be concerned? I am uncomfortable submitting a return with info that I cannot verify.
Mm.
Should I delete the info?
Okay, the answer is first of all, don't delete the info, Jennifer. What CNIL is, okay, is essentially in cases where you got, for example, investment income that is below your carrying charges or investment expenses, okay, or like for example, financial charges for your investments, okay, that creates what's called a cumulative net investment loss. Okay, another example of that would be, for example, if your mortgage interest is higher than the rental income you collected during the year. That would also create a cumulative net investment loss. Okay, now that does not affect your return. The only time it'll affect your return is if you sell, for example, certain types of assets that would be eligible for what's called the capital gains deduction. So this would be, for example, shares in private Canadian corporations, or if you sold a farming property or fishing property. What CNIL will do then is reduce the capital gains deduction you'll be entitled to for the disposition of those assets. Okay, so but don't erase them. They don't do anything on your return until you sell those types of assets, which you never know. Maybe you're going to incorporate someday, create yourself an incorporation that you're going to sell later on for a huge profit, and then at that point, normally those profits will be tax exempt. However, the CNIL would reduce that exemption. That's essentially what they would do.
Okay. Bianca, could you talk about some tax saving tips, credits, maybe new to 2024 tax year? I know about the digital news subscription credits, Ontario Trillium, the HST GST refunds, which I think does not require a page to ask for a HST refund. That's correct.
Yeah, you just submit your return. That's all, and the government will determine it. I mean, some tax savings tips. I mean, the general one is that everybody's looking for that magical, credit or deduction that's going to really reduce their tax. That really big trick. What I would say is, just archive your documents properly. Most errors on a tax return, we actually saw examples of this, is errors of omission. Okay, that's usually the
Mhm.
typical. We saw a bunch of questions about refiling, which were omissions, and that reinforces that point. Make sure in this case that you have all your ducks in a row. And what I tell people is a tax return is a year-round process, not just tax season. Okay, because you get receipts and you get receipts during the year that are eligible for your return, but they're, throughout the year. But the only way you're going to be able to maximize those claims is to have those receipts handy when you produce your return. So what I tell people usually is create a folder at the beginning of the year and stick any document you think, you suspect is related to your tax return. And then once tax season comes around, you just filter and sort at that point. And that way you're sure to maximize all your claims, especially when it comes to medical expenses and donations. I can't tell you how many times people will go to a dentist in the month of February. And then once their tax return comes around, they forget completely that they had that receipt. And then they lose out on making those claims. Another thing I would tell people as well is the concept of the carry forwards. So, for example, there are amounts on your return that you might not be able to claim right away, but you could claim in a future year. We had an example of this, which was the capital losses. That was one example of this. Okay, so in that case, make sure that you don't have any carry forwards that you haven't used up over the years. So, for example, tuition is an example of this. Capital loss is another example of this. RSP is another example of this. The way you see your carry forwards is your notice of assessment or your My Account portal with a CRA. Go through it. Make sure that you don't have any amounts that you banked over the years that you haven't used, because the government is not going to use them for you. You have to do that. You have to do it yourself. So that's what I would say, in general, as far as tax saving tips, some of the basic ones.
Yeah, and even if eyeglasses, eye doctor,
hmm
those are part of medical expenses. A lot of people
The
forget
key is
those.
archiving. Yeah, the key is archiving, because if you did it in February and now you're practically a year later, you're going to forget that you had
Hmm.
that receipt. But if you have that archiving system where you archive right away that receipt because you know it's related to your tax return, by the time tax season comes around, you have it handy. It's there,
Hmm.
and now you can actually make your claims.
Okay. Ravi, he wants a bit of clarification on the medical expenses were shown on the 2023 returns, not itemized, but as a total sum. I
Mm,
didn't get any NRTC because the total expenses were less than 3%. In
yeah,
2024, I would like to claim medical expenses for a 12-month
yeah.
from July 2023 to June 30th, 2024. Is it kosher?
Yeah, I mean, you did not claim the amount, and the government does not see the detail when you transmit the return. So you should be okay to do it. You should be fine to claim it as long as you move the date. But just be mindful that in the following year, now you're going to lose out on a certain portion of that of your medical expense claims, which is the first 6 months of the year. Okay, so you have to be very, very mindful of that.
You
But
need
yeah,
to keep track. You need to keep
yeah, you
track of
need
the
to keep
dates you're
track of it.
using.
Exactly. Exactly. Because every year you could change the date, actually. You're not required to follow, for example, June 30th every single year. You can actually go back to December 31st. But the key is that you might miss out on a portion of the year, because you decided to move your year end
And you
in
can't
that
claim the
case.
expenses twice.
Yeah, exactly.
Okay, Constantino. Hello, I have a condo abroad in a country that has tax conventions with Canada that has been
Mm.
rented for many years. No, now that I leave the country, am I supposed to declare capital gains on the condo even if I didn't sell it?
No. So you left the country. That's what I'm assuming. You've left Canada. That's what I'm assuming. I have a condo abroad in a country that has tax convention with Canada that has been rented for many years. Now that I leave the country, which country are you leaving, Constantino? Your country of origin you're talking about, or Canada? If you can answer that, because then I could see whether you're subject to the departure tax or not. If you can answer that question, Constantino, which country are you talking about leaving? Your country of origin or Canada? Okay. In the meantime, let's see. Okay,
I
Ricky,
think
thank you
that
very
was that, that
much.
was that was the last question, I believe.
Yeah, yeah, that looks like it. Yeah. So, Constantino, if you could just answer my question to you, which country you're talking about, which country are you leaving, and then
I'm assuming
I'll be
he's
able to answer
leaving
better.
Canada, but
No, 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 that's not it, Constantino. No, that's not it. I'm not talking about CMHC. In your question, you say, now that I leave the country, am I supposed to declare the capital gain? Which country are you leaving? Canada. Okay, so you are leaving. Okay, so you're an immigrant now of Canada. So the deemed disposition rules, you're not subject to the deemed disposition rules on real estate. You are subject to it though for what's called for other assets, like for example, a taxable brokerage account. Okay, so for example, let's say you have shares in companies in a non-registered account. Those would be subject to the deemed disposition rule, but not real estate. However, you do have to declare the real estate on the T1161. Okay, that you're leaving it behind. Okay, so you do have to declare it in this case, whatever properties you had. Okay, so then we have another question.
Yeah, Jennifer, many years ago, I overcontributed to my RRSP. Later, I withdrew the amount and paid the tax and the penalty. Despite writing to CRA more than once, my NOA continues to show the overcontribution. Any suggestions?
Yeah, Jennifer, the fact that you withdrew from it does not cancel out the contribution. Okay, basically you had 90 days to cancel the contribution. Okay, if you did not do it within the 90 days, the withdrawal does not matter. You still have the over contribution. The way it works is you need to gain more room. Okay, in order to nullify the over contribution. So from one year to the next, you have to create more space. In other words, in your RSP eligible room, and the only way to do that is to have earned income. That's the only way. As long as you keep working, then your room gets extended, and then that will cancel out the over contribution in that case. But the fact you withdrew from it does not cancel it out. The only time a withdrawal will cancel it out is if you do it within 90 days of when you made the over contribution, and then you have to do it through a specific form. Okay, with a CRA.
Okay, Zia, my son has US citizenship. Should he submit the tax file to US as well? He has a bank account and some other ties with the US.
To my knowledge, yes. To my knowledge, once you have U.S. citizenship, you have to file every year. That's my knowledge of U.S. returns. Don't quote me on it though, because I'm not a specialist in U.S. taxes. But to my knowledge, you do have to submit a return even if you have no income in the U.S. You still have to submit a return the moment you are a U.S. citizen. You do have to submit one every year.
Jennifer just added she has been retired for many years regarding the RSP over
Ah,
contribution.
okay. Yeah, that becomes a problem. That becomes a problem then. Um, Yeah. Are you interested in a rental property? Because that could be one way of, of increasing your limit.
Uh,
Beyond that, contact them. At that point, contact them. There's really no other way. Because the only way you cancel out the over contributions is by creating more room, and you need to have earned income in that case.
all right, Jay. Um, I have one more question. As a Uber driver, I didn't take note of my car's odometer mileage reading on January 1st and on December 31st. I just had an invoice from Canadian Tire with the mileage reading on January 14th,
Yeah.
2024 and the reading of April 11th, 2025. May I
Yeah.
use their difference as my total mileage when calculating all mileage for 2024, because from January 1st to April 11, 2025, I barely drove my car. I personally think that wouldn't be too many kilometers.
Okay, so you're trying to figure out your business mileage, basically, is what you're
Yeah.
trying to do. Um, yeah, the government will accept a quarter of the year. So what they'll do is, if you have a log of a quarter of the year, they'll usually accept it. Okay, as the business as your typical business mileage. But yeah, that you would need a quarter of the year, which I think you basically need it. Canadian Tire with mileage on January, and then the reading of April 11th, 2025. That's more than a year, though. I'm thinking. I think you meant 2024. I think is
No,
what you
he's
meant.
he no he didn't keep track, so he has another reading after December 31st,
Okay.
2024. That's my understanding.
Yeah, you would need a quarter of the year. This would not be acceptable to the CRA. You would have to show them a log of some sort of proof of a log of a quarter of the year minimum. 3 months you would need to show. Otherwise, it won't be acceptable to them.
Okay, Ilya,
Yeah.
I'm incorporated. Can I use
Mhm.
UFile to file my personal and corporate taxes?
The answer is yes. So you would use UFile T1, personal taxes for your personal taxes, and then you would use UFile T2 for your corporate taxes, and that one's online. So simply go to our UFile page, ufile.ca, and then within the products tab, you're going to see UFile T2 there as well. It's two separate returns, obviously, but we can provide. We could be the solution for you for both.
Okay, Bianca, for comparative return page between 2023 and 2024, how can I find a page for it? I tried to no avail.
It's called the
Um,
comparative summary. That's what you need to
you have
find.
to, there's a box on the interview page that you need to tick off, if I remember correctly.
Well, if you produced the previous year, those should be there. It should be there by default. The 2 years, and yeah, it's called the comparative summary. Every tax return produces it. You file whether you used it in the previous year or not, it should be there. It's called the comparative summary.
Okay. Ricky, can I use RSP over contributions for HBP payment?
To my knowledge, no,
I
no,
don't
because
think
you're
so.
over your limit. Yeah, no, I don't believe you can. No, no, you can't.
Linda, thank you for liking this webinar. Yes, it's going to be available on Facebook to rewatch, and we will be posting it on YouTube also,
Yeah.
on our YouTube page. Okay, Ravi, for US citizens living in Canada, I think there is an income threshold under which the reporting may not be required.
Not to my knowledge. U.S. citizens, it depends. If you're a non-resident of Canada, it depends on the type of income you gain. Essentially, that's basically what it is. If you have employment income in Canada, you are non-resident. You have to produce a federal return. You'll be subject to provincial tax as well. But there's no threshold really. The moment you gain income in Canada, usually you will be required to file a return. Some sort of return in Canada.
I
I think we
missed
skipped.
Constantino.
Yeah,
Yeah,
Constantino. Yeah, we
Constantino,
missed it.
one more question. When filing the whoops, sorry. When filing the T1135, if the condo that we are owning is valued at 120,000, but we are two owners, do I need to fill out the T1135?
Well, remember, 1135 is not what it's valued; it's what its cost was. It's what its cost is. Okay, so it's not the fair market value you're declaring on the T1135; it's the cost. That's number one. If it's split between two owners, then yes, you're below the $100,000 threshold, which means you're not required to file at that point. It's basically what you own. It's the cost of the foreign property that you own. So that means if it's half of that amount, that means in this case you will not be required.
Okay, Corey.
Okay.
Person A and Person B are presently separated as of June 2024.
Yeah.
Tax return using UFile for Person A 2024. UFile asks the following: TOSI, adjusted net income of ex-spouse prior to divorce or separation. T
Um,
1206, line 6.
Leave it blank. I would be shocked if you would be subject to TOSI. It's a very select few people that would be subject to what's called tax on split income. That's what TOSI. That's what that acronym means. Yeah, I would just leave it blank.
Okay.
That's all.
2, UFile on next line asks net federal income of spouse or common law partner before the separation, line 23,600 of his or her return.
Yeah.
Warning, do not use an estimate income below the actual.
Yeah, because in the year of separation, you're still entitled to the spousal amount. You can still claim the spousal amount in the year of separation, and you use the income that the ex-spouse gained up until the date of separation. Okay, that's what you're using. All right. So at that point, that's why the program is asking for it. Now, if you can't get the amount, then what I would recommend is just put in an income amount that's above the basic personal amount, which would be 15,705. Just put 20,000 essentially. That should nullify that what's called that diagnostic or whatever the warning the program is going to produce. That's what I would do.
Yeah, he says, how do we get the amounts if the two are separated and are not reconciled? Will the
Yeah.
CRA determine this amount? What if
No.
the ex-spouse won't release the needed data? The
Yeah.
accountant that did their 2023 taxes said they can't share person B
Yeah.
2024 tax data with the person A because of privacy requirements. That's
Yeah.
correct. The accountant cannot share the information.
The accountant cannot, but the spouse would be
Can.
required.
Yeah.
Would be required actually to share the amount because the other ex-spouse can claim their spouse for the spousal amount. They're entitled to it in the year of separation. Okay, so but I would say, listen, put 20,000. That should cancel the amount, and that should cancel your diagnostic. Okay,
Okay.
so I think we're past the time, by the way,
Yeah,
but let's do one
we
or
have
two
the
more
last
questions.
four questions, I think, for people. I think they should be
Yeah.
fast. Bianca, for Ontario Trillium benefit, if I don't pay rent, energy, or property taxes because I'm staying with parents, can I still claim Ontario Trillium benefit?
If you don't pay energy or property tax, no, you probably can't because you're not entitled to any of the components. You can still claim GST credit though, but that's about it. That's all
Okay.
you're gonna be able to claim.
Arun, do individuals get extra RSP contribution room in their year they retire?
You could still get room as long as you keep working. If you keep working, you still get room. The catch is, though, that as of 71, you can't make any new contributions. That's the catch. But the room continues to accumulate, but you will never be able to contribute or use it because once you hit 71 years of age, a calendar year you hit 71 years of age, you can no longer contribute. So what some people will do is that they'll load up their RSP contribution the year before they turn 71, and if they intend to continue to work, then they can continue to deduct by using up that huge amount that they contribute in the year before they turn 71. Now over contribution penalty will apply, but sometimes the deduction will outweigh the penalty that they would have to pay. So that's like advanced tax planning. That's a very advanced tax planning in this case. But they can do it. Yeah.
Okay, Adrian, I'm claiming the Canada caregiver amount for my spouse who has an impairment, not a disability. Therefore, I'm
Okay.
eligible to claim this caregiver
Yep.
amount, but not
Yep.
the disability tax
Yep.
credit. This appears to be
Absolutely.
calculating correctly on the return, no
Yeah.
disability credit being claimed. However, there is an estimated Canada disability benefit um, page on
Yeah.
the return stating she'll receive this benefit, which is incorrect. UFile support stated this page won't be sent to the
Yeah.
CRA, but I'm just wondering why it's appearing on the return.
I'll be honest with you. I don't know why it's appearing on the return either, quite frankly. But yeah, no, it's not going to be submitted because it's an estimate. So it's not something that gets submitted to the CRA. I don't know why we're producing that estimate though. To be honest with you, that I'm not sure. I'm not sure why it's doing that in that case. Yeah.
Okay, Steve, please remind what happens when a person dies.
I guess tax wise, you're assuming. I don't know what the
Yeah.
great beyond has for us. I have no clue about that. But when it comes to tax return, it depends. Usually, it depends on who the inheritor of the assets are. Okay, that's essentially what it is. When it's a spouse, there's a deemed disposition at cost, and there's no tax consequence. That's the default. But if the person who's inheriting a portion of the assets or all of the assets is anybody but the spouse, then you have a deemed disposition as of the date of death at the fair market value of those assets, whether it is capital assets or whether it is retirement assets. Okay, that's usually what happens. And the deceased person will have some sort of extra income to declare, whether it is a capital gain for capital assets or whether it is retirement income for retirement assets as of the date of death. That's usually the basic rule of what happens when somebody passes away.
Patricia, I have an issue with the foreign property during the interview. I indicated no, but when reviewed the tax return condensed sheet, it shows yes. How do I fix that?
Oh no! Okay, give us a call. That doesn't make sense. It should not be answering different between the return and the condensed return. That you should not have a difference between them. Give us a call. We have to look at the file. We have to
hmm
look at the file in that case.
Does it have anything to do with if you're submitting T3s that have or T5s that have foreign income on it?
No, no,
Okay.
it should not. It should not at all. No, no.
Okay, Constantino, I have received a T4 with box 38, security option benefits. Do you think that I can go ahead and exempt this amount if admissible, or is it the accounting department that does the exemption?
The accounting department does the exemption. You're supposed to have a box. You're supposed to have an additional box, which usually is box 39, which indicates the exemption portion. Usually, it's about 50% of that benefit is exempt. But the government did make some changes last year that made it stricter to get and harder to get the exemption. So the accounting department is supposed to indicate it. If there's nothing there, then you can't claim the exemption. The government will refuse it if there's no equivalent, if there's no box 39 in this case.
And one last question.
Yep.
I'm not going to pronounce the name because I know I'm going to miss it. So, what's the penalty for not filing tax for between 3 to 5 years? Must an African Canadian who lives in Africa for more than one file tax?
What's the penalty for not filing a tax between 3 and 5 years? The penalty will be basically 5% if you have any balance owing. Okay, so you'll be
Plus
five
the late
percent of the balance
charges.
owing plus yeah, plus interest, of whatever is owed. So you're going to get penalties that are going to get charged. And if you've left the country and you are now in another country for more than 1 year, well, then you still have to file a last return with Canada, which is an immigrant return, which we call an immigrant return. You still have to file one. In this case, to indicate to the government that you no longer have permanent residential ties to Canada, and that you will no longer be filing any returns past the year that you left. All right, I think that's
Okay,
it.
I think that's it. We're all caught up. So
Awesome.
thank you for your questions. We really appreciate that. Thank you, Gerry, for answering them.
Yeah.
Let's not forget tax deadline, April
Yeah,
30th.
April 30th. If you have a capital gain, is June 1st or June 2nd, and if you're self-employed, is June 15th. Okay, so so thank you again for the well wishes. Thank you for the nice comments. We do this for you guys. We do it for free, right? So we're doing it as a benefit for all of you. And now, then don't forget to go to our website ufile.ca. We post a lot of literature there when it comes to taxes in general, and go to our Facebook page and our YouTube page as well. We post a lot of videos on our YouTube page on various tax topics and how to's in the software. So, for example, the capital gains question that I answered before, there is a video there that shows you how to enter, net capital loss from previous years directly there. All right, so don't hesitate to visit all of our pages. We have a wealth of information that we offer for free that we don't charge anything for. All right.
All right.
So thank you, everybody.
Thank you, everybody. Have a
Have
great
yourselves
afternoon.
have a great afternoon. Have a great day. Thank you very much.
Okay. Bye bye.